Hi, this is Trevor Cutmore. Thank you so much for coming on to see this video. I'm doing a series of interviews with great professional people who've got great insights, and the whole point is to help you, property investors, overcome barriers and obstacles to help you complete that deal. Now, I've got a lot of experience, but if I'm just talking at a camera, it doesn't really work. So I love talking with people. I learn, they learn, and more importantly, you learn. So listen, if you like this video, please like it, make a comment, and if you can share it, that'd be fantastic. I wish you all the best. Okay, hi, this is Trevor Cutmore. Thank you for coming on to the channel again and watching this video. This is all about helping you, the property investors, learn and to help overcome obstacles and barriers so you can get your deals. Now, I've got Martin Smedley from Refurb Refinance.
Hi there.
Who is my mortgage broker. So he knows me very, very well. And he knows probably more about me than I know about myself, and that's a good thing because he does all my mortgages, all my finance and everything else.
So it's been a pleasure, Trevor.
Oh yeah, I'm not sure if he says that when he's not with me, but it's fun. We do laugh a lot, we do. So I've got him here. I've got a series of videos with Martin because he's got so much knowledge. So I've asked him to break it down. We're going to talk about the buy-to-let product.
Okay.
All right. So this is when people come in to the property market, for new people really, and they're looking at a product and just really basically, obviously when they're going for an investment product, it's normally they're looking at a 25% deposit and they can get 75% lending. Now when someone comes to you for the very first time and they only ever had a residential, what's the biggest mistakes or the things they haven't got in place?
The first thing, Trevor, is money.
Money, right.
Always money. They
Right.
never have the deposit, or they haven't worked out what stamp duty costs. They haven't worked out what 25% of 100,000 is.
Right.
They also, from the common mistake is that they want to get into property big time and they jack their jobs in to
Yeah.
buy to-let properties. It's just crazy.
All right, so look, I've recently spoken to an investor, came to me and said, Trevor, I've got £40,000. Can you tell me, would it be best if I went, A, I give up my job, I go off and I try to find some multi-lets, and maybe I can do it on a rent-to-rent basis and replace my income, fast, but that 40,000 would do me for 12 months, or should I do B, buy one HMO up in the north somewhere and allow that to work for me, but then I can't do anything for a few years. So it was a very easy one for me. I said, look, if you do the first one, you're going to run out of money very quickly because you jacked your job in, so you always spend more when you're not working than because you want got more time to spend.
Yeah.
And secondly, you're taking away your mortgageability.
Yep. Lending companies are looking at this now. A lot of them have minimum income structures, especially if you're a first-time landlord.
Right.
If you're not earning £25,000 or £30,000 a year jointly or independently, then there's a group of lenders just won't touch you. The ones that offer mortgages where you earn less than that, say 15,000, or they don't worry about income so much, they're getting fewer and far between.
Right.
So then you've got the instance, do I jack in my job? I really want to go on a property journey. I've got a bit of cash in the bank, etc. Well, you're ruining your mortgageability with a large rake of lenders.
Yeah.
So why would you do that?
Well, this is what I said. I said, actually, if you really do one property now while you're working, you can actually use videos, you can give a case study, and then you could be attracted because you've gone through the process, you understand the pitfalls as well as the successes, but it's an education to learn what goes wrong. Yeah. And then you can attract other people who say, well, look, I've done it. Why not come in with me and we can do the second one, the third one, the fourth one together. Yeah. And every two, you've got one for free.
The other challenge you get is people want to go too big too soon.
Yeah. They're
going for the 9-bed, 10-bed, 15-bed HMOs. They've never rented anything in their life and never run anything in their life, and they're going too big. The property journey starts simply. It starts with your single buy-to-let. It starts with your maybe multi-let or small HMO. Yep. You don't have to have them for that long to get the experience. Yep. But why do some people want their property journey to go, well, bang, within 12 months they want it done? It's not going to happen. There's nobody going to fund them.
Right.
So literally, it's a staged progression. So you get your buy-to-let. You might even do a refurb.
Yep.
Might, the first one out. So you get your experience. Otherwise, you're working with investors, or we're going to talk about in a minute, joint venture partners. Yeah. So property journeys are simple, very simple. It's overcomplicated by people.
So Martin, you say that, you know, people are the problem because they get in the way, because sometimes people, they don't know what they're doing. So you'll get people that come along and they say, right, I want to buy 3 HMOs, or I want to buy an 8-bed HMO, as rightfully said. They've got no experience. And the thing is, you know, what these videos are really designed to help people, but also to help you, because you must get really fed up with people ringing you up and asking, and basically they want an education on what they've got to do. So if we, you know, this is an opportunity to speak for new people coming in who are going to come in and do a buy-to-let mortgage, and you know, they have got a little bit of money, the credit's fine, let's do that, and yet, what do you want to say to them?
Look, when you're getting involved on property, for the first one, there is no point in trying to get it all done at once. The 9, 10, 12, 15-bed HMO, conversion of a pub, you're not going to get it done in this market. But that seems to be the way people want to go. Right. Okay. They don't want the single buy-to-let. They start talking about buy-to-let, service accommodation, HMO. Now, those 3 subjects are doable as a first-time buyer. Service accommodation is pretty much new, by the way.
Yes.
But when you start thinking about the bigger properties and the bigger jobs, which you're going to talk about in a minute under refurb and maybe a bit of development, they're just not going to get funded. So they're going to waste all of their time and energy trying to plan something that physically can't be done. Now, I don't know where the advice comes from, it doesn't really worry me, but I think somebody's got to point out that when you're starting out in property, the lenders will fund you based on your experience and the risk that you provide to that lending company. And lenders aren't stupid.
No, they're not. I tell you what I find sometimes complicated is that a lot of lenders, they do change their processes quite often.
Yes.
And look, and you come over today, and I've just completed so many forms to do 2 remortgages, and it's umpteen forms, and you've witnessed my signatures and all of that. And that's been quite an education in the way, and even for you, you're thinking, oh my goodness, because you were speaking to your office, they've sent so many documents here.
Yes.
So obviously it's changing. And you've just been talking about actually setting up a service that someone can go out who's qualified to help somebody sign it, so everything's done. Because it must be a bane of your life in that everyone signs something, it's sent back, and there's a missing document, or they've signed it in the wrong place.
Or it's the wrong document.
Or it's the wrong document.
Yeah, the mortgage process is relatively straightforward.
Yes.
That's what it's meant to be. You phone your broker, you give the broker the details, broker gets a decision in principle for you, then the processing begins. So there's 2 different aspects to this. You've got, in general, the lending company. Then you have the lending company's solicitors. Their legal team that will always deal with your solicitor, or they might do it themselves as a joint rep. They call it joint representative, means they work for you and the lending company. So the lending side of it is relatively straightforward. You provide your passport, your bank statements, the mortgage application form and everything. It goes off to the lending company. There might be some other bits and pieces. Relatively straightforward. Generally, with most lending companies, offers will come out quite quickly.
Yes.
Now, once you've done all of that,
this is it.
It moves on to the lender's legal representation. Now, there's loads of solicitors all around the country that lending companies use.
Good and bad.
Some may not perform in the way in which you like.
He can't say it, but I can. They're good and bad. No, honestly.
So then you have a second load of paperwork to deal with. Now you've had your mortgage offer, you've had your mortgage deed, you've had everything else. Suddenly you're then faced with independent legal advice and various other legal documents, plus a rake of other things you've got to send in as well.
PGs, personal guarantees.
Now, it doesn't matter whether you're in property for a minute or 5 years. It is, or 10 years. It is a horrendous task. So what we're saying is, in the past, we've operated a collection service. Having seen it with you today, and sat there painfully watching you do it, I think it would be better if we operated the service where we sent people to you to go through all of those documents. That might be two visits. It might be one for the mortgage and one for the legals.
I have to say that the mortgage offer is fairly simple. I have to say that is fairly straightforward. It's when it gets to the legal side and the solicitors who take over, they start the communication slow. There's not really a nice list, a chronological list. We're going to give you this is what you've got to produce, this is what you've got to sign. If we could have that on each one, it'd be fantastic, but we don't have it. Maybe that's something that it can be looked at.
Well, I looked at the email that you received today, and I've been around for 30 odd years, and I just think that is bad communication on behalf of the solicitors.
Yeah, I think it was 15 or 16 attachments.
15 or 16 attachments and badly worded.
Yeah.
You didn't know where you were going to witness, you didn't know what you had to sign, there was just no indication anywhere on these documentation, which we will bring up with that particular lender and their legal team when we get back. But yeah, if that's going to be common, then we're delaying completions, we're delaying processing times, we're delaying everything where it's unnecessary, absolutely unnecessary.
Just really quickly, I want to touch on money laundering.
Yeah.
So if someone's got their own pot of money, where do you want to see it? 3 months, 6 months?
Lenders will go back 3 months, we go back 6.
Perfect. So people should know that you need to go back 6, and that's the same if you're going to borrow money from someone else or joint venture partner, because we know that some people think, I tell you what, you give me £50,000 in my account, I'll hide it there, and then I can say it's mine, which we know happened historically many times. But now, you know, lenders are wise to that. I've never done it, and I wouldn't recommend anyone. You've seen it, I'm sure, many times. So again, if you're going to do joint venture money coming in, again, 6 months track where that money's come from, of the joint venture partner and everything.
To be clear, the majority of lending companies do not accept what we call third-party funds. A non-related person lending you, loaning you, giving you money for whatever reason. There are certain lenders that will allow it. Tends to be for the more experienced landlords. It's the companies like Shawbrook Bank, for example. We all know they do it. So and those lenders will allow the investor to invest in the company that you've just set up by way of a loan agreement, so it sits on your books as a loan. All right, it's very simplistic. If you're doing a buy-to-let, or with, say, a communal garden building society, they don't accept it. No.
So, I don't know if you remember, because it was really interesting. I bought a property on Portland Road, and that, I believe, originally was on for something like 110,000 or 120. And I think 3 buyers went to buy it. So remember, this was a house that was split into 2 apartments 30 years ago without permission.
Oh, I remember,
So 3 buyers had gone to buy it with high street banks. So as soon as they looked at it, they said, absolutely no way. And it failed. And I ended up paying, I forget, it was about 80 or 82 with Shawbrook, because it's a commercial entity. And that was it. And I've got to come and refinance because it's almost doubled in value with title splitting. So, you know, that's...
that's one example. You got lucky.
But again, that's understanding and having, you know, a broker who's on that panel. Just touch that, because that one I had a bad experience with, Martin. That's why, you know, originally we got together. I had a mortgage broker and I was doing a application through Shawbrook, and both the broker and the solicitor both could not deal with Shawbrook. Unfortunately, they didn't tell me this when I entered into the process with them, until at the 11th hour both of them said, you need to go through this other broker because they have on the panel, and the solicitor said you need to go through this other solicitor, which incurred extra costs for me, and I was livid. So that's when I found Martin and came across, because you're on everyone's. Actually, you almost grew up with all the guys in the banks.
Yeah, we know pretty much everybody at Shawbrook, everywhere really. After being in the industry since 1988, it makes me sound really old.
I was born then.
Yeah.
No.
Nice one. But yeah, Shawbrook, there's a lot of lenders that operate what we call closed panels.
Yes.
So they will select a group of firms that they can give fancy names to, like strategic partner or whatever they want to call you. But basically, we are the front line for the bank. So they will refer brokers back out. I think in your case you were shoved round to some packaging company somewhere. But then you sort of see the fees get added to the...
Ridiculous. And look, honestly, guys, I don't recommend a lot of people, but Martin, I highly recommend, because of his experience. If you have a problem with getting a mortgage or something, and you go to Martin, whatever Martin says to me, I take it to the bank. That's it. So if he says, no, you can't do that, Trevor, I don't even go elsewhere. So Martin has a wealth of experience. Martin, I want to talk a little bit about if someone has a little bit of bad credit, because if we went back 5 or 6 years, that was really bad, he had any bad credit, one late payment, bang. Where are we today?
All right, with today, the mainstream specialist lenders operate pretty much a tiered structure.
Fine.
So they would have tier 1, clear. Tier 2, a little blip on there. Tier 3, probably some historic problems. Some will only go back 12 months, some will go back 36 months.
Right.
So you have a group of lenders, so minor credit problems.
Yeah.
A minor could be a CCJ that's been satisfied.
Fine.
That's
Perfect.
not a biggie these days. But then you move down the list. Current mortgage arrears, current CCJs, credit not paid everywhere.
Yeah.
Now the number of lenders in those instances are few and far between.
Oh yeah, but what are the rates? Crazy rates. 15%, 13, 15.
You're probably up 6s, 9s.
Yeah.
Right. In some cases there is a there is a 16. Which yeah, we possibly wouldn't do that for you.
No. I wouldn't.
Stick it on your credit card.
Yeah, absolutely.
Right, but yeah, it's not good. But no, they're all around, and they're being a bit more open now.
Right. Okay.
Whereas when we came out of the 2009 debacle, they were very rigid in what they did.
Going back 6 years, weren't they?
Yeah. And now it's we're a vanilla company. We just want clean people.
Yeah.
And now it's starting to be a bit more open.
Perfect.
There's more lenders in the market now, of course.
Perfect. All right, and look, for new people coming in, they haven't got experience. They want to do a single let or something not too big, like you've advised. When they come to you on the first day, realistically, they've got no experience. How long until the very start of the process to when they complete on that property?
Let's take it up to where they get to their solicitor, who's in charge of completing it. All right, because we've done our bit.
Yeah.
Then the average from offer on the property to completing can be 3 or 4 months.
Yeah, no.
Let's be honest. I mean, the lenders are not particularly quick. The solicitors certainly are not quick.
Yep.
All right, and the whole system is a little bit clunky.
Yeah. Do you think that's going to speed up?
I think it will. I think it was never that slow. Some lenders have got really quick.
Right,
there are some out there really fast.
Look, we've seen with a particular lender that I'm using at the minute, from application to offer, it's very quick. It was all document on site, online.
2 weeks.
Yeah, 2 weeks. The offer was there. But the solicitors, it's a nightmare. Yeah. It is. And I know that's out of your hands, but as an investor, what can I do? Because this isn't my solicitor. This is the lender solicitor, which I have to pay for. But I'm not directly their client. It's a lender's solicitor.
Yeah, they work for the lender. Your solicitor works for you. So there's and then you've got this big triangle going on of people.
Yeah.
There's not a lot we can do about it at the moment.
Right.
All right. Now they are what they are. Will they speed up? Probably. Will they get replaced? Probably.
Hopefully.
And you'll get another one of similar quality. But there are some really, really good ones around.
Right.
So again, when you're looking for a mortgage product, people chase the rate. Why don't you ask a simple question? Whose lenders' lawyers work better as well? So if you're paying 0.1 or 0.2 more to get a decent set of solicitors, then
that's a top tip. That's a top tip, because it can make the difference of you getting the property or losing it. Because if the vendor's getting tired of you and it's taking 3 to 4 months, and you could do it 2 to 3 months, then that means you secured a deal. But if you're dragging on, it's nothing stopping that lender selling it to someone else.
The other challenge you're causing it is obviously the rise of the limited company.
Yeah.
Now, limited company loans are not new.
No.
But the number of lenders doing them has increased. Now, they're not used to it either. So you've now got a firm of solicitors trying to work out how to adequately protect a lending company. You've got a lending company lending in a regime which up to now hasn't been that comfortable for them.
Yeah.
So now you've got a mixture of things. And this is why you're seeing the products changing a lot and the requirements around it changing. Right. So limited company is clearly the way to go because of recent tax law changes. Yes. We know that. The number of individual buy-to-lets doing, apart from remortgages, so brand new purchases is probably 5 to 10% of our business now. 90% is probably limited company.
Yeah.
So you have to take it all into consideration. Now, lending companies haven't got the staff that they once had. I mean, we in the old days, a lending company washed with staff, and now you've got half a dozen underwriters, a couple of risk guys, and a bloke called Dave that takes all the pain. All right, so it is difficult, but we always say lenders have problems, they always will, but they're still lending money. Doesn't make them a bad lender.
Yeah.
We've seen a lot of things on forums about Shawbrook, about their service being appalling and blah, 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 blah. They're here and they'll lend you money.
Yeah.
So let's just work with them now, because you may need them when others fall by the wayside.
No, I agree.
So
I agree.
Never criticise a lender.
No, and I'm a good customer of Shawbrook.
You are now, yeah.
I'm a very good customer. Okay, so that really helps on people on buy-to-let. So thank you for that. That's absolutely brilliant. What I want to look at now is buy, refurb and refinance. What a lovely little product this is.
Yeah.
It's almost, for me, a throwback to the old days of, listen, buy with a bit of discount.
It is the up and coming one.
Yeah. It's buy the discount because the market's moved again, so everything's secular. We're coming back, we can get a bit of discount, we can add value, and guess what? We can refinance now. Yeah. So, okay. And again, where does this work with people with no experience, with experience, and you know the processes and what we've got to do, and who we stay with, the same company, or should we flip out to someone else?
This is quite a complex one, but let's just look at it.
Keep it simple.
Keep it simple, stupid. If you've got experience, let's start with there and work our way backwards. If you've got experience, it's not really a bother.
Right.
There are lenders out there that will do the bridge to buy out, fund the refurb if you need that.
Yep.
And will also refinance it. So they're giving you a guaranteed exit or an exit facility. You don't have to use it, but at least you've got a backstop. The exit is the most important thing on all of these products. So unless you plan your exit, don't do the start, I say. Now you've got 3, 4, 5 lenders that will offer you a facility to bridge, refurb and then refinance out at the higher value. All right, so take your money out. Now if you've got no experience, then some of those products are not available to you because you haven't got experience. Okay. So you have to do it in 2 stages. But the first stage is, what are you creating? Can you get out of it? If we bridge you to go in, can you get out of it? So you might have to go in with lender A and come out with lender B. All right? Not ideal because you're incurring charges across it. The first one, you've got a transition, if you like, call it a transition. You go from your bridge to your end product, saving yourself time, fees, money, legals, blah, 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 blah. On the second one, of course, you're paying your fees on your way in, no early repayment charges generally on a bridge, but then you pay a fee to the new lender and new legals on the way out. But that is the problem if you're a first timer. Get over it, because that's the way it is. There is no way around it. Now, once you've done your first one, you're then into the A scenario. All right, but it's your first one. Got to get it out of the way. Now, the lenders you go to for as first timer, they will not be your mainstreamers. Unfortunately. No. All right, it's how it is.
And would you say less experience means a slightly higher rate?
Generally.
Right.
Generally. Okay. If you're doing a normal bridge to buy and then a refurb and then forget the refinance out, you would probably pay around at 0.7 to 0.75% a month. There are some products a little bit lower, there's some awful lot higher. As a first timer, you'd be lucky to get 0.75, more likely 0.85, 0.95 per month. All right, that's really where it's going to sit. Okay, no, that's great, and that gives people a ballpark. And what about the cost in? Is it all? Because everyone's different. Sometimes I see it's 2% in, arrangement fee, nothing out. Sometimes it's 1 in and 1 out. Is it generally whatever? Either way, it's normally 2%. It's settled down now. It's 2%. 2%. It's
that's
2% added to the loan. You've got a number of ways you can pay for the monthly interest as well, or not pay it, as the case may be.
It's rolled up to the end.
It can either be rolled up. A lot of lenders use what's called retained. I mean, Shawbrook are doing an 85% refurb product at the moment. It's a light refurb product, but you can have 1 to 12 months retained from the advance, which means you've got no payments to make on the way through. And also, they will give you an out. Now, we might not use it, but at least you can get out with them.
And remember, Martin's someone who can deal with Shawbrook. Not everyone can. That's the crazy thing. What about time? So look, the Council of Mortgage Lenders many years ago came up and said there's this 6-month rule, which you and I know it's not actually a rule. Okay. So, my experience is, and correct me if I'm wrong, is that find a house that has a really place, the car home road, right? It had needles in there, there was no central heating, it was riddled with damp, the kitchen was falling down, the bathroom was disgusting, and I took lots of photographs and everything. But within, I think it was about 3 months of work, we want to flip out. Now, a lot of people who understand the 6-month rule say, well, you can't do that until you put out 6 months. That is a lot of rubbish, providing you can evidence what you've done to change it to make it livable.
Absolutely. The 6-month rule is there for a reason. Some lenders operate it, some don't. It is not new to say that it's abolished. I mean, a lot of people jumping around going, oh, look, Kent Reliance have removed the 6-month rule. Well, a lot of lenders were doing it anyway. Now, you can refinance. This is where you get your refinance timing right. You've done your work. A month before your work is finished, get planning that refinance.
Yeah.
Get all the paperwork done and get ready for valuation, because you don't want to be on that bridging contract for a day longer than you need to be.
No.
There are no exit charges on a bridge anyway, but just get the thing done.
Yeah.
So you get really ready, refinance as quickly as you can. If it's with the same lender, brilliant, right? But you still need it revalued. A lot of people forget this.
Yes.
And they think valuations take place on a Monday, we get it back on Tuesday.
No.
They do not take place on the Monday. If you book it on the Friday, it will probably take place Friday week, 8-9 days down the road.
Yeah.
Sometimes. If it's a more commercial valuation, once it's been done, it'll take 10 days to come back.
Yeah. Because again, let's just talk about that then. Because when I pay, you know, when you say, right, I'm ready for my valuation, you don't organise it. So a lot of people think, broker, you're going to organise it, but you don't. I pay to a central thing and then it's booked out and they let you know. So although you might chase it for me, you know, we are in someone else's hands and it's as busy or less busy as
the common conception is that we actually know the valuer, we go to drink with the valuer,
yes.
we feed his children. We don't. All right, we have no control over these people. Yes, we can to a certain degree select the valuer from a list.
Yeah.
We get a list of maybe 5. Do we know them? No. We might have knowledge of them from doing previous valuations, but we cannot control how he operates on the day.
No.
Or the content of his report.
No. And that's one of the biggest things, isn't it? Down valuations.
Yeah, it's the bane of our life.
So how do we as investors, you know, help make sure that when a surveyor comes, is there anything that we can do to help give confidence and get that valuation any higher?
So some of this is very simple. When you're going to buy a property, there are some very simple checks you can do on this property. Apart from visual, of course you see what it is. You can check the planning portal to see whether it's got the right. Typical, it's only yesterday. Guy rings up, it's a residential. It's C3. Mm-hmm. We look at the planning portal, A5. It's a takeaway.
Yeah.
All right?
Yeah, yeah.
So what do you do? So simple stuff, do your due diligence. If you're going to do an HMO, at least measure the rooms.
Yeah.
Make sure you can get the right room sizes.
Yeah.
If you're going to buy a block of flats or some apartments, measure them, because if they're flats and they're below 30 metres squared, your limits on where you can go for that lending is going to be small. Due diligence, I shouldn't be doing it.
No.
I shouldn't be sat there looking at a computer going, oh, let's have a look and see how many floors it's got, because the guy can't actually remember. How many flats in the block? The guy can't actually remember, or girl can't remember. How long's the lease? Don't know.
I know.
Know what you're buying. Estate agents will not know the answer to the questions.
No. You've got to do the due diligence. I 100% agree. And it is a shame, because actually my last video with Simon Mazevich, the property tax accountant, we talked about professional advice. So I get a lot of people ring me up and asking, you know, advice about property investment, but I charge for that. Simon now charges for his advice. And I know that you get incredibly busy, because people do ring you, they do ask you to do extra things, which you very kindly do. But, you know, do you think there's a time coming when, you know, good brokers are going to start charging for their experts, especially when they have to start doing due diligence, which the investor should be doing anyway?
Yeah, I think it's time, and we've historically never charged big brokerage fees. In fact, we waive them wherever we can.
Yeah.
But it's coming where we are sitting on the phone, instead of doing Trevor's 3 new properties, we're answering questions about the same question over and over. Can I get an HMO mortgage? What does this planning regulation mean? This room size is too big, too small, too wide.
I know, and that is a shame. And look, Simon and I we were talking, and I actually think it's a good thing to pay for advice, because at least you know you're getting the professional advice. You know, one of the things I talk about, I've done a presentation. I haven't delivered it yet, but it's about, don't take advice from people who are not productive. Don't take advice from people who aren't qualified, and be very careful where you get that advice from. There's too many people who are free to give you advice, especially when they're not even in your field. But sometimes what I find is when they're academically more superior than you, they quite happily tell you what you should be doing, but haven't got a clue what to really do. Yeah. So, you know, professional advice, I mean, I appreciate everything that you do for me, but I know that you go well beyond, and you know, helping other people, which when you answer the questions, some of them I know will go off elsewhere to put their business, and they just want to suck that information. Yeah,
and we can't save all souls, and there's certain things we won't do. Well, there's a lot of things we won't do in investors' world, as you know.
Yeah, no, absolutely. So no, there are brokers out there who would say, well, don't worry, I'll complete the form for you, just sign it. Martin doesn't do that. So Martin is only straight down the middle, and that's why I'm with him. Martin, one of the most important things by Refurb Refinance, buy to let, anything that we do with finance, for me, when I talk to people and they say, you know, what is the most important? Actually, last night I was talking at an event, and they said, you know, what advice would you give? And I said, exit, education, location.
Yeah.
But exit for me is number one.
Exit, yeah, whatever you're doing. People also think about a simple buy-to-let product.
Yeah.
If you're on with certain lending companies, you might only do a 2-year fix because you chase the rate.
Yeah.
All right, and the rate's 2.9 or 2.7.
Yeah,
it's
yeah.
3.6. But the 5-year at 3.6 against the 2-year, you're going to be redoing that mortgage in 2 year.
Yeah.
And we'd love you to redo the mortgage in 2 years, but really the 5-year. Look at what you're coming out on as well. But you just got to look at it logically, Trevor. It's
Martin, what's really funny, and I've got to be straight with you guys. Look, Martin is a financial advisor, okay? He advises me. So I know a lot of people that are chasing those rates. I want, you know, this little rate. Martin would say, Trevor, I can get this, but I advise you to do this. Now, it costs a little bit more, but over the period of time, it's more secure, it's better for me, I can do more with that product, and it's more, all of it, it's to my advantage. And I listen and I take it. And it works for me. So it's not always about the cheapest is best. It's not.
No, and to be fair, a lot of the cheaper rates are with the building societies or the Virgin Monies or the Santanders or the Leeds or whatever it might be. But you're a portfolio landlord.
Yeah.
You're going to struggle there. So we have to accept that with the stage you are in your property journey, that you're not really going to be one of those customers for them. No. They don't want you because you've got too many properties now.
Yeah, yeah. No, absolutely.
Which is bonkers. Yeah. You've got too many. There are some that will still play with you, but so to speak.
But that's why I'm in commercial finance. There's no limits on it.
No, and you're paying a little bit more on the rate, but then you're doing limited company deals anyway. And limited companies, how many lenders are actually doing it?
Yeah.
Name mainstream that are physically doing it. Yeah. TMW.
Yeah.
Badly.
Yeah, no, absolutely. So look, we've talked about a few things. What I'd like to touch on before we finish is development finance. All right. I think it's a really interesting. You know, I'm doing development, building houses, etc. And you know, again, for people in property who want to make that step from, let's suppose, they've done their HMOs, they've done some buy refurbs, they've got a bit of experience, they want to come into this.
Build stuff.
Yeah, I want to build stuff. It might not be huge. You know, it might be 2 or 3 houses to start with. But where do they start with the finance, and how do they make that step? Or saying, look, I haven't done it before. I've done this, which is good. Now I want to go into this without the experience. How do they do that, and finance and everything to get it going?
Start with who you are. I mean, if you've done a few refurbs before, and you've done, I don't know, some other bits and pieces in property, then you've got access to this world without a doubt. Now, the level of that access will depend on your team around you. And that'll be your builder, maybe your architect, your project planner, your QS or something like that. So as long as you've got the right scenario, you can move forward and apply for finance. And you would probably get it. All right. Now, starting out, maybe a 200 housing estate would be a little bit too big, but we get people asking about that. Madness. But a couple of houses, 3 houses, 4 houses, 6 on a development. We did 12 down in Wiltshire, which they had not really done anything in finance before, but they were funded, which is good.
100%?
They were, but that's a story.
Okay.
100% on both, all right, on purchase and on development. But who?
I know you're going to get calls about that.
I know. I'll explain that. I'll explain that very quickly in a minute, so that we know how that happened. All right. So anybody can do it. Most people will JV with somebody. Now it could be for experience, or it could be for money. Either, or it could be both. And then it comes down to, I now have investor, and who's got a pot of gold. I don't have any money, all right, and I want to build this over here. So who's going to fund, literally, you 100%, really, is what we're talking about. You're putting nothing into it as such. Now, majority of lenders will say, no, unless you got, they call it skin in the game. I think we've heard that so many times. Unless you've got money travelling through the deal, we're not really that interested, because you're not really doing anything with it. It's not you, it's them.
Yeah.
So
Except having the liability, of the fund, which obviously on a PG, it does have skin because you've got your assets, which they'd take.
Exactly. The personal guarantees are there for a reason. It's probably a new company that's just set up. It's got no trading history. You're always going to have a personal guarantee.
Yeah.
The level of those guarantees vary from lender to lender. Some are 100% of the loan, some are not, some are 60%. So they vary wildly.
Okay.
But look, if you're a majority shareholder, you want to build something, use development finance, you're having a PG. There's really no way around it.
So you're going to have to clarify, because how are we going to get 100% purchase and 100% development? You call. I'll tell you, I'm actually going to put this in the caption.
Right.
You want to get 100%? Call Martin.
All right. This is something that the property investors talk about all the time. But the land itself was bought on an option.
Right. Okay.
All right. So it was bought on an option. They agreed and shook hands with the farmer on a certain price. Let's just call it £500,000.
Yeah.
Because I'm not going to give the name of the client away. But
yes.
They went away, once they've got that, they agreed that they're going to buy it in the future on the option. So
Yes.
they have to exercise that option on a certain time. They applied for planning permission, got planning permission granted, and what happened to the value of the land?
Absolutely.
It went up. So the lending company then came along and said, how much are you paying for the land? They said 500,000. What's the land worth? The land was worth 1.2 million.
Yeah, okay.
So they said, well, based on that, we'll fund the land
Fine.
as well. So they not only funded 100% of the land, they also funded 100% of the development costs.
Fine. And is that open really to anyone in that position?
If you do a savvy deal, yeah.
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 Okay.
If you do a savvy. Normally, you would make an agreement to go and buy something, and then you'll hear brokers and people talking about, oh, you'll get 75% of the value to loan to value on the land and 100% of the build cost. That's not true.
No.
That's all. The land itself, you on a deal, you probably get, once you've taken cost into account, 60%, 65% in your hand.
Yeah.
That goes to your lawyer to assist the purchase. Maybe slightly higher in some instances.
No,
but and it's the way it's valued as well, Trevor.
Yeah.
People look at open market, they don't understand valuations. They've got open market, 180 day, 90 day. What the hell does this all mean? So, I mean, that's a subject for another day, but it's another thing.
Well, very quickly, I mean, it's a bit like a fire sale. So if the developer is caught with the, and that's it. I do want to touch on this. If the investor goes bust or whatever and leaves it, or the builder runs away, the lender wants to sell it quick.
Yeah.
And they have these different timescales about selling it, basically to get rid of it quickly. 90 days sale, we know we can get this much.
That's auction fire sale.
It is.
Isn't it, really?
It is.
And then you got your 180 day, which is always lower than the open market value now. A lot of the development and bridging lenders and some of the mortgage lenders will use a 180 day valuation figure to work out how much they're going to lend you.
Yeah.
Now, you might be sitting there going, I've just created this lovely thing. It's worth 500,000 or 600,000 pounds on the open market to a willing buyer, but to a lending company, it will come down. 180 day could be 10% less, 15%. Who knows? Whatever the value on the day says. But the lender will lend you off that figure
on the land or the
either. Yeah. Well, on a development, of course, you've got an end value, which is finger in the wind time, really, isn't it?
Well,
it's pretty much.
I mean, when I'm doing development, I always go for Rick's Surveyor to give me a GDV. So they're usually attached to an agent, estate agency. They've got local knowledge and they understand. And it's interesting because one of the ones that I've done, they well over what I thought it was actually worth myself, which I was pleasantly surprised. But there wasn't similar comparables in that road, so I thought this is absolutely phenomenal.
You're right. The valuation is key to everything.
It is.
We said a lot of the guys we haven't dealt with. They've come to us. Maybe they've got a bridging product, or they've got an HMO, or they created HMO, or they created flats, or whatever they got. They've come to us and they're stuck on this bridge.
Yes.
First thing we say is, can we have a look at the previous valuation? Can we have a look at it and see what was done? And we have a look at it, and the answer isn't there because they haven't had the correct valuation carried out. It's so simple. Look, if you're going to do anything, ask a valuer, and we'll book it for you through the network. But it's ask a valuer to value on what it is, and with all your plans, an estimated end value.
Yeah.
At least you know where the parameters are.
Absolutely.
We had this one. This is it's a sad story in a way, because there was a lady that came to us. She had a valuation. She had a bridging product by a lending company, and she was creating it was a small development, but she was, primarily the property was an HMO. So on the valuation report, which she hadn't seen to that point, right, was two figures. One was what she's buying it for. She thought the property's going to be worth 400,000 plus at the end of it. The actual end value predicted by the valuer on day one was 180,000. The actual valuation, when it was all done, came back was 165,000. So the poor lady's now got a bridge that she bridged at 85% as well with a high rate lender at 85%. Now we can't get her out properly.
No.
You know, she'd overstayed her welcome with the bridge as well, because she was a first timer. The work had taken too long.
Yeah.
You know, but the answer was there right on that paper at the start. If you see the figures and they're in front of you, you do two things.
Yeah.
Well, first thing is you query it with the valuer just to make sure he hasn't made a mistake. Second one is get away from that property.
Yeah. No, I agree.
Don't buy the blinking thing.
I agree.
Right. But that's a common mistake people make.
No.
Or they don't want to pay for the valuation because it costs more money. It's going to cost you a lot more money if you do it and it fails.
Yeah. Yeah.
So pay for it. Do we always like the answer the valuers give? No, we don't.
No.
I mean, if you think about it, 90% of our time when valuations come in is spent querying valuation figures.
Yeah.
Yeah, there's been a lot of news about Brexit and has it causing upsets on valuations at the moment. We haven't really seen that to a large extent. I think lenders become more realistic with the way they value HMOs, for example.
Yeah. No,
all right, so it's the expectation with some people on the commercial value of a property.
Great. Listen, Martin, this has been great, and we're going to close it off soon, but there's a question I want to ask you. You'll obviously have some bugbears where you get people ring you up and ask you the same question over and over and over again. You know, it might be 2, 3 or 4 questions, or an action. I know you've mentioned due diligence. Go away and do the due diligence. You know, download the title document. So this is your chance, because you can always point them and say, look, go and watch this video and then come back to me, because you know it might be a half-hour video or something. So if you could speak to people now before they're going to ring you with the same question, because I'm sure you get thousands of these calls tying you up. If you could say something and say, look, do A, B, C, D and E, or these are the questions, these are the answers, what would you say?
Well, the first thing is, look, if you're going, before you even start, find out what you're buying. That's the first one. Don't ask me, I won't know. I don't know what the property in Lytham St Anne's is like, or Burnley or Barnsley. I live in Swindon. All right, I know the areas, but do due diligence on the property. Then secondly, all right, look at your situation. Is your situation, are you a first timer or experienced? If you're a first timer, all right, then don't ask me about doing a 7, 8, 9, 10 bed HMO, or buying a factory unit that's going to be converted into 68 mini flats, or buying student accommodation blocks. You're a first timer.
Yeah.
Be realistic. The real one is in the HMO market. The amount of conversations we have about commercial valuations. All right, I would recommend speaking or getting on a course somewhere, right, to understand how. Trevor, to speak to Trevor for God's sake, because people think that they can take a house in a street. All right, they can stick 6 people in it by putting a fire alarm in, and because they get £36,000 a year rent, that property's gone up £200,000-300,000. It's the same as the one next door.
Yes.
All right.
Yes.
So it's not going up. So that's the biggest problem. Understand commercial valuations.
Yeah.
Understand planning laws.
Yeah.
Article 4. Understand what that actually means.
Look it up and read it, and look at the map where you're investing.
Yeah.
Is your property inside the map? It's not hard. Google is a wonderful resource.
Yeah. Look at your tenant types. Look at your area. I get asked, is this a great student area? How would I know?
No, that's and this is their business.
They're asking.
Yeah.
They
so want the money. They want.
No, I don't mind answering questions. I really don't. But it's become apparent that maybe guys are going on a lot of courses. I don't know, or getting a lot of information, and they're picking little bits of that information. Go to somebody like Trevor who will put it together for you.
Yeah.
All right. Put it together and say, no, this is what you need to do. This is the knowledge you need.
Yeah.
All right, and then go to your broker and say, I understand what I'm talking about. It's not good enough, really, to come in not knowing the property, not knowing the planning laws, not knowing what you're going to do with it, haven't even got a measure out.
The title document.
Yeah, and who the tenants are going to be.
Yeah, no, definitely. Look, brilliant advice.
All right.
No, it really is. One final question I got for you.
You've always got one final question.
No, honestly. And this one, I've got a big smile on because I hear this a lot, and I know his face is going to change when I ask him this. people who have buy-to-let mortgages and then decide, oh, I'll turn it into an HMO, or I'll do service accommodation without going to see their mortgage broker or speaking to their mortgage provider.
Yeah, not a smart move.
No.
See, some people do it with, I mean, people's intentions are right. They just don't think things through. So if you've got a conventional buy-to-let mortgage, and it might be with any mainstream lender, and then you turn it into service accommodation or turn it into an HMO, you might have even reconfigured the house completely, structurally, or suddenly it's got 6 en suites where it only had 1 bathroom before, or it's got an extension out the back with a family living in it.
I don't need to tell a mortgage company,
No.
do I? You do.
Yeah, you do need to tell them. Now, the problem is most of the buy-to-let lenders don't accept that.
Yeah.
So you would have to move that onto an applicable product somewhere else. All right. Now the lenders will find out eventually you've done it, because the councils will send a license to the lending company. They'll get round to it eventually, and you'll be caught. The other one is when you buy a property, and you want to refurbish it and change it substantially on the inside. So you buy it for 150,000, you spend £80,000 on it, and then you try to go to a normal mortgage lender who doesn't have any early repayment charges, for example, because it's cheaper. All right, so you then buy it on the wrong product, then you ask us to take it out. We won't do that for you anyway, so that's not going to happen. You should buy it on a bridge. But if you use that product and you then come out the other side, mortgage lenders are starting to say, hold on a minute, you've just abused that other specialist lender.
Yeah.
Right?
What's the penalties?
Well, in the initial, I mean, you're in breach of your mortgage conditions anyway.
Yeah.
So if you use that particular product from a well-known lender, you're in breach. If you haven't let it in 30 days and you've done work to it, you're in breach. Now, not only that, you've substantially altered it, so you're in breach. So that lending company can do whatever it likes with you. More importantly, your property journey has now slowed down, because the number of lenders that will look at you, including the bigger guys now as well, they're starting to say, it's moral grounds.
Yes. Finally, we're getting some morality back into lending.
Yeah,
I like it.
Eventually. Yeah.
I like it.
Not from the banks though.
No.
But so you've got that problem as well. But if you're going to start off your journey in that way, now you may not know it's wrong, because that might be advice you've been given.
Yes.
They'll never find out, blah, blah, blah. They will.
Yeah.
All right. Then you're cutting down the number of lenders you can go to in the future, and you haven't got that many to play with. You know, in reality, there aren't that many.
You must be. I mean, must be seeing a lot of things like this. So the rent to rent, that landlords have a buy to let, sign this document so someone's doing it room by room.
Yeah.
You know, with that, if someone, so imagine, you know, the insurance is there. If there was a fire and someone dies, and that landlord, the owner, has actually signed to say yes, you can do this, they are liable. Yeah. And the insurance is null and void, and mortgage breach, and
possibly,
so it could be a long time in prison.
It could be a challenge for you on a legal front.
Yeah. Well, not for me. I don't do it, but you know, just by making sure.
It's naivety of people.
It is.
You know, they nobody likes speaking to their lenders. Most people don't like speaking to their banks.
Yeah.
All right. So you to ask a owner of a property to phone their mortgage lender to say what you're doing, he's going to operate is not going to work wholly, because he probably doesn't really understand what you're doing in the first place.
Yeah.
So the mortgage lender will probably not understand what a rent to rent is anyway.
Yeah.
All right. So then you've got the guy who wants to do the rent to rent, you've got the property owner, you've got the mortgage lender, you've got the insurer, and you've probably got legals as well for some sort of contract that's been drawn up. But this guy that you're taking the property off, he probably doesn't understand what you're doing anyway.
No.
So, and mortgage lenders do not recognise the rent-to-rent business, and you know, I'm pretty 100% sure that the mainstream lenders wouldn't agree with that activity. No. If you went to them and asked them that real question, not consent to let, can I let my property out? That's a wrong question.
Yes. No. It's
all right, and you don't start dressing it up by saying you're a management company.
Yeah. Yeah. Okay.
Because you're not.
Okay. Martin, that's been brilliant. Can you just let people know your name, how they contact you, your website, and just leave that? I will put it up as well. But go on, speak to them and tell them, how do they get hold of you or your company?
We can reach out. It's Martin Smedley. We reached at Prospero Finance, mobile number 07812 664462, and the website address www.prosperofinance.co.uk.
Perfect. Listen, I hope you really enjoyed it. I did. I always learn a load when I'm with Martin, and I wish you all the best on your property journey, and thank you very much, Martin. Bless you. Cheers, guys.
Thank you so much again for watching this video. I hope you got a lot of information and it's helped you on your journey. If you have liked it, please like, subscribe and share to help other people. I wish you all the best. Thank you. Bye bye.